Oops.
Oh, okay.
I kind of accidentally hit that button a little too soon, but
That's okay.
didn't mean to interrupt you.
No, it's perfectly fine.
Sorry about that. Well, since we are recording, then and it's 3 minutes past the hour, guess we'll get started. Hello, I'm Mark Pinto here at Phoenixville Public Library, the library's Adult Services Director, and we're pleased to have you folks with us tonight for this presentation on empowering women through financial literacy. Women in investing, effective personal financial management, and the unique challenges and opportunities faced by women in the world of finance. And giving our presentation tonight, we're pleased to have with us Elizabeth M. Pagano, CFP, Certified Financial Planner from Creative Capital Wealth Management based in Chester Springs. Elizabeth is a veteran of the financial industry with over 20 years of experience working with some of the largest and most distinguished financial institutions in the world. Elizabeth, thanks so much for doing this tonight, and take it away.
Thank you so much, Mark. That was a fantastic introduction, and I really appreciate it. And I also want to start off by thanking all of you who signed up and signed on this evening, and who are taking the time and who have the interest in learning more about this topic. You know, financial literacy fundamentally is an investment in yourself. It's an opportunity to learn more about something that really is fundamental to our lives and is a real source of independence, particularly for women. This is something that I am personally very passionate about and have been for a number of years now. And I am excited to really give you a broad overview of finance. At the same time, I'm not 100% sure where you all might fall on the spectrum in terms of financial knowledge. There could be some of you who have no idea what a stock or a bond is and, you know, are terrified of looking at their 401k statement. And there are others who are particularly experienced in this and are hoping to dive a bit deeper and to really expand on their knowledge. So I welcome everyone, you know, anyone and everyone in terms of that, in terms of where you fall in that spectrum. I aim to be, you know, to accommodate really any knowledge space. And that's one of the things that the accompanying document that you're going to receive after this is to help with as well. So to help you take a deeper dive if you wish, or to just kind of get a broader understanding of finance, of the world of finance and what you really need to know to kind of get yourself, you know, through it all. So again, as I mentioned earlier, I do encourage you to ask questions as we're moving forward. You do not just have to listen to me talk this entire time. I welcome the exchange. That might actually take our conversation in a particular direction, and that's perfectly fine. This is about you, and I am here to help. So I just want to get that out of the way right off the bat. And at this particular point, I just, you know, as I mentioned, I want to thank everybody. And I want to really start off with something that I have found in my 20 plus year career. I started in finance in 2000, as Mark mentioned. I did a number of different areas of the, you know, financial field, from mortgages, you know, then moving on to investing in 2008 with the Vanguard Group. And I spent a number of years with Vanguard, where I built a lot of my foundational knowledge. And that's actually where I did kind of get my approach, so to speak, when it comes to financial planning and financial advice and education, which is, I do believe, simpler is better. I love the term. I like to say that, you know, the KISS term of finance: keep it simple, stupid. So that is something that I do actually recommend. Don't get overly complicated with finance. You 100% can, but it's not necessary. And it's, you know, as I mentioned too, that, you know, that's where I also encourage you, if things are getting to a point where you're not quite sure and you have questions, to please ask that. But one thing I have found, particularly with women, and I like to start off these talks with this one sort of observation that I've made over the course of my career, which is, I have found that women in particular are very insecure when it comes to their knowledge, you know, with finance. It comes to their financial knowledge, which is really a sin. I found that in meetings, typically, you know, it is, when it comes to a meeting between a husband and a wife, and me as the financial planner, it is typically the husband that speaks more often than not. And this can be a range of ages. This is not just something that we find with maybe an older generation. I see this with, you know, Gen Xers and millennials as well. And I will oftentimes kind of like point blank ask the wife or the partner, you know, hey, do you have questions? What are your thoughts? How do you feel about this? And my response is typically, I don't know anything, so I can't ask any questions. And if you take one thing away tonight and from this presentation, my hope is that you take away that you know more than you think. Women, like I said, are, again, found typically are very insecure about their financial knowledge, which is a sin because they oftentimes know more than they realize, and they ask excellent questions. And when they are encouraged to ask questions, when we are encouraged to ask questions, you know, we are encouraged to get a better understanding of these things, it will just really expand our, you know, not only our confidence, but a sense of freedom as well. And that's what another thing that financial literacy can, you know, translate to is freedom in a way. So again, you'll notice that I will touch on these sort of broad reaching themes a few times during this talk. Is, you know, the idea that if you have questions, no matter how you think they might be interpreted, ask them. If you feel like someone is kind of like, if you're talking to a financial professional and you ask a question and they are kind of like, I don't want to say smirking, but like sort of like, oh, you know, or maybe think that that's a silly question or what have you, that should be a huge red flag, that that's not somebody you necessarily want to work with, because it is the financial professional's job. It is their responsibility to make certain that you are comfortable with and that you understand your financial setup. So this is where sort of the idea of advocacy comes in. And this is something I'm also very passionate about. I encourage anyone really, but women in particular, advocate for yourselves, ask questions. No question is dumb. If someone makes you, if you feel like you're asking a dumb question because of how the person is, and this can be, frankly, not just men, but women as well, unfortunately. It's an equal opportunity situation. But if you feel like this person is not taking you seriously, not taking your concerns seriously, again, that should be a red flag to you or an indication to you that maybe this is not somebody you necessarily want to work with. Because no matter what, you are important, your questions are important, your money is important, and this is your money. So I 100% encourage you to bring up any concerns that you have, you know, whenever you're dealing with a financial situation, and make sure you're getting the information you need. Making sure that when you leave that table, you do have a better understanding, because again, that's the responsibility of the financial professional, is to make certain that not only do you have an understanding, but you're comfortable with how this is working, with how your circumstances are working, what recommendations they are making for you, and that they are recommending things that are in your best interest. This is very, very important. So before I get really, you know, started, does anybody have any questions that I can, you know, touch on before I launch into it? Okay, well, I'm going to take that as we are all listening with rapt attention, and I appreciate that. So thank you very much. So essentially, as I mentioned earlier, the importance of financial literacy, particularly for women, this is really an understated and really underrepresented, represented aspect in finance, is the aspect of, you know, catering towards women. Now, fortunately, some institutions out there, like the Vanguards of the world, like Fidelity, like Schwab, Prudential is another very good one, have actually put together educational programs geared very specifically towards women. What we have found in the last 10 years, in particularly, the financial industry has had more of a focus on the psychology of financial planning. This is something you might not have necessarily heard, you know, in the, like, you know, the greed is good 80s, definitely not then, or the 90s, or even the like aughts and the like, you know, financial crisis and all that. This is something that really started coming about, in my professional opinion, when millennials started investing. You started hearing more about like, well, I'm not really interested in the technical aspect of this. The fact is, I don't feel good about this. I don't get it, and I don't like it, and I don't trust the system. And so one of the benefits of taking the time to get a better understanding of finance is that comfort level, you know, feeling, you know, more that you can advocate for yourself effectively. And this actually does make the system better. That's why we're seeing some of these very positive changes in the industry, is because people, women in particular, are advocating for themselves more and more. So again, I can't stress enough how important this is. And again, especially for women, you know, less women are getting married later in life, there's a need much more so now than ever before for financial independence, particularly for women. I was born in 1980, and I was very, very fortunate that my parents did actually teach me that it was important to be financially independent. But I would say even at that time, I know women my age in their 40s and even in their 30s that were taught when they were young, don't worry about this. Is not something you need to know, because you'll get married one day and your spouse will take care of this for you. As a financial professional, that would not be my advice at all. This is absolutely something that, let's put it this way, I always recommend you be on your own team. This is something that no matter what, you really can't. In the immortal words of an old Baz Luhrmann song, came out in 1999, don't depend on anyone else to support you, because you never know when these things might run out. It is also, like I said, not having this information or not having this experience and this drive to really get an understanding of this can really, in a way, trap you. So taking the opportunity to delve into these things more so is, like I said, in a way, is a form of freedom, really. So now that kind of going over sort of the benefits of financial literacy, as I mentioned, is very much this idea of freedom around your life and control. So one of the things that when you're thinking about finance, we're talking about budget and expense tracking and all that fun stuff, but broadly, when you think about planning, financial planning, you want to sort of have an understanding of the things that you can control and the things that you cannot control. And my recommendations, I can't stress this enough, if you can, try not to stress over the things you cannot control. We cannot control what happens in the government as to whether or not the debt ceiling, for instance, gets raised. My personal opinion, they're going to do it. It'd be in their best interest to do it. But at the same time, that's beyond something I can control. You can't control the market fluctuations. You can't control the fact, and the market is an emotional animal. If you look at it and you think to yourself, oh, this must be like something particularly scientific or really, there must be something going on here with the calculations. No, I promise you it's not. It is 100%. Tim Cook of Apple could sneeze the wrong way. Apple could drop 10%. It literally is, it's an emotional animal. You have zero control over it. Don't try. I don't recommend trying to beat the market. I don't recommend ever doing complicated, investing, investing styles at all. I mean, you can if this is something that you're really into, and there are people who are. I found women don't tend to fall into that category. Most, like, for instance, when I tell people I'm a financial planner, the number one question, not so much anymore, but the number one question I used to get asked was about crypto. I promise you, not a single woman asked me about crypto. Not a one ever would ask me about crypto. So this is where you think about like risk. Women tend to view risk differently. Traditionally, women are known to be, a little bit more risk averse. I have found that women are a little bit more pragmatic when it comes to their finance. Women have a different style of investing. They are not looking for that excitement necessarily that when you hear these stories, again, the whole, Wall Street money talks, Gordon Gekko kind of stories of, getting this great deal and beating the market and finding this, finding that hit that you will just blow up and you were in the know, or somebody who shorted the mortgage industry back in 2008, that one guy that happened to do it. Yeah, we don't really, women don't typically approach investing that way. In my professional opinion, that's a much smarter way to go. Your best bet when it comes to financial planning, personal financial planning, is to be practical. Think about what worries you. And actually, you too also take an emotional kind of aspect, emotional look at it. Think about what you're worried about. Fundamentally, think about what you want your future to look like, how you could possibly get there financially. The details will come, so to speak, when it comes to like budgeting and expenses and specs tracking and debt and all that. And we can dive much more into that. But at the, when it comes to like broadly, you do want to think about what's going to keep you up at night. How can you work this out? That will also help you in terms of the questions you might need to ask. So if we're talking about setting up a budget and building wealth, or approaching retirement, even, I would say, when something somebody asks you, what are your financial goals? Maybe a better question is, what are you worried about? What are you excited about when it comes to finance? And to start there and to sort of start on that top and sort of build in. That's going to be a great way to begin this financial journey if this is the beginning for you. And that also that another top area of that I touch on in my classes, and you'll get some of that when you get the handout, is your values when it comes to money. So are you somebody who stresses when you have to make a big purchase? Or are you somebody who, when you're dealing with a stressful situation, maybe you go on Amazon and before you know it, you've racked up a $250, bill on things that were in your wish list. And you're just like, you know what? I just came into some money. I'm just going to get, and it's sort of like a form of, they said retail therapy. It's a thing. It is a thing. I'm a financial planner. I have found myself going down those roads before as well. So it's very real. So these are the things you want to think about as well. Sort of your, emotional relationship with money, with finance. And sometimes that can also, sometimes it can be a little bit of a therapeutic journey, so to speak. There is such a thing as financial therapy. There is actually a link in the handout that talks about the Financial Therapy Association. This is something that the Financial Planning Board, Certified Financial Planning Board, which there's also information on there about that, has been diving into more so, as I mentioned earlier, the psychology of financial planning. So fundamentally having an understanding of your feelings about money, your values when it comes to money, that's going to play into the more nitty gritty financial planning that you do. So that's what I mean. If you're starting your journey, start broad. That's where I'm going to definitely suggest start broad and narrow it down from there. I would not recommend getting hung up on the details necessarily. There are plenty of resources out there that will teach you more, what you need to know when it comes to investing, when it comes to retirement planning, when it comes to just building wealth all around. There's tons of resources out there. And again, the handout you're going to be receiving will cover a lot of that. But start broad and build, go into the detail from there. So again, kind of checking on the 20-minute mark. Any questions so far? Anything that, anybody would like to, touch on or get more detail about? Okay, all right. So something else you might be hearing a lot about currently, again, is the volatility of the markets, the banking crisis. I know that's been a lot of questions for a lot of people. Inflation, how is this going to impact me? Again, I would classify a lot of that as in the topics of areas that are beyond your control. That doesn't mean you shouldn't have an understanding of them, because better to kind of have a understanding of it, because that means the better you understand a situation essentially and what's kind of going on, the less it might freak you out, so to speak. So if market volatility is something that worries you, there are wonderful resources out there as well that kind of will give you an understanding of what's going on. But again, the banking crisis, for instance, and how that might impact the market, all of that, I'm like trying to think of like a way to sort of put that in, understand. Basically, again, at the end of the day, I would try not to necessarily worry about that. Because and try not to let those things also really impact your decision. This is where, again, the market being an emotional animal, so to speak, can come into play. When you are making decisions, you really do want to, again, focus on your big picture goals. You do not want to react. The last thing you want to do is react to the markets and react to the financial news that you're hearing. Something that happened quite a bit in 2008 is that the market crashed. I was at Vanguard at that time, and everybody wanted to sell because they were saying, I'm losing money, I need to sell. I would actually say, no, you're not actually losing money. The value of your investment is fluctuating with the market, but that's not the same as losing money. You still own the same units of whatever investment you were in. So say you were, investing in the 500 index fund, you still have the same, quantity of that investment. It's simply flowing with the market. To sell at that time then if you were to actually sell an investment while it was low in a panic, which is understandable, but if you were to do that, then you actually have lost. That is when you've actually lost something. And the unfortunate thing that I saw in 2008 is a lot of people selling in a panic and then not buying back until possibly years later, until the market at that point had swung back and then some, and then all of that gain they did not see, and so yeah, that's what I mean when you're seeing something like that, and and I'm touching on that because I'll be very frank, the markets have actually been doing rather well lately, but I would sort of warn you that we could be in for some turbulent times. I'm not making a prediction. That's the last thing I want to do. But anytime you invest, period, you just kind of go into that with a preparation, with a idea that these things can fluctuate. You don't want to delve into something particularly risky, and we will talk about risk to some extent because there's all kinds of risk, but you wouldn't necessarily want to delve into something particularly risky if you have a shorter time horizon, because then you don't have the time to wait out those ups and downs. So when you're thinking about a financial plan, when you're putting that together, you want to think about not just the risk you're comfortable taking, but the time you have for that investment, how long it's going to be, baking, so to speak. You want to think about what that investment is ultimately for. If you're 30 years old and we're talking about a 401k, a money market fund would be a hugely risky investment in that type of account. Now, that might seem a bit counterintuitive because a money market fund, its whole purpose is to preserve your holding. You're not exposing it to the market. You're not going to see that up and down, but you're not touching, if you're 30 years old and putting money into a 401k, you're not touching that money for another 30 years. So to have it in something that, well, actually right now money markets are earning like 4.5%, which is pretty good. But like typically that's not been the case. If you're in something that's earning say 1%, the risk that you are taking on is that your money will not actually really be the value that you need to be when you need it. So it's a different kind of risk. That's the thing you want to think about. Risk is not just speculation. It's not just market volatility. It's not just, legislative, components and such. It is essentially, risk comes down to your money not working out the way you need it to when you need it to. And that risk, as I mentioned, can manifest itself in a number of ways. So these are things you want to think about, and even though, like I said, the volatility of the market might freak you out a little bit, if you are in a circumstance like that where you're 30 years old, even say 40 years old, it would be a riskier move to have it not working for you, even though you could see it fluctuating over the course of bad market, conditions. That is actually less risky than having it in something that might not grow at all. But on the flip side of that, say you are 55 and you want to retire in 5-10 years, well, now is not the time. At that point, now is not the time necessarily to be riding the high. This is also something that we saw a lot in the industry in 2008, unfortunately, were folks who were in their early 60s and who were, going through like the mid-aughts when the market was just gangbusters, and they just had this idea, and I'm not singling anybody out, this was everywhere. I had this idea that the market was just going to keep going up in perpetuity. The market never continues to go up in perpetuity. It always corrects. That could be, a nice way of saying the market crashes, the market corrects. And at this particular point now, for instance, we are seeing the market at a particular high, and we could very well see a correction. So that is not, but again, the idea of a correction being on the horizon is still not a reason to not invest in something that would be appropriate for your longer term financial goals, which might be, stocks, bonds, mutual funds. That's another thing as far as an investment strategy. This is very much the vanguard in me talking. I am always going to recommend a mutual fund approach versus an individual stock approach. Individual stocks is just a really boring style of gambling, essentially. It's really what it comes down to. It may not feel that way. Some people might say they have the secret to day trading. I promise you they don't. If they did, trust me, they wouldn't be telling us. if they had some secret to like really successful day trading. If you ever do really want to get into individual stocks, my recommendation for that, or my advice really for that, is pick companies that you're particularly passionate about. Say there's a company that is doing work in a particular field that you know about and you are excited about it. Consider buying some shares of that company because you're excited about that company. But that's not necessarily, you don't want to necessarily bet the farm, so to speak, on that one company. This is kind of what happened with Enron and WorldCom. People had their 401ks 100% in the stock. And then when the company went down, that was everything. It was gone. If you go with mutual fund, and again, this is the Vanguard talking, and Vanguard and me talking, I definitely would recommend also index funds, something broadly diversified and inexpensive. This is, Mr. Bogle would have been so proud. The less you pay, the more you keep. So I do very much recommend keep your costs down. That is something, I mean, sometimes we're going to need solutions that might be on the more complicated side. They could have some cost to them. There is nothing wrong with, paying for services and help when it comes to finance. But I can definitely tell you when it comes to this industry, there are oftentimes a lot of costs that are not mentioned. This is where the idea of advocating for yourself comes into play. Make sure you know what you're paying. Make sure you know what you're being charged. Make sure you see it in writing. Ask the financial professional you're working with how they are compensated. There is nothing wrong with that. That is well within your right. I have clients ask me all the time, how are you compensated? Are you commissioned? Are you salaried? That is an excellent question. And I am more than happy to divulge all of that in detail because it's an important aspect to the financial advisory relationship. You need to make sure at the end of the day, it is your interests and your interests alone that are being looked out for. So again, ask these questions. Don't ever be afraid to ask these questions. If you feel like you need to know, then you need to know. And there's actually a link in the handout that you're going to receive after this that goes into all of the questions that women specifically should be asking a financial advisor before they actually work with that financial advisor. So that's something I really do encourage all of you to take a look at if this is a journey that you're either starting or maybe thinking about making a change on. That's definitely something I would very much recommend. So kind of touched on the markets. We touched on sort of the idea of risk. This is more of an investment focus or investment centric kind of talk. But the financial world, this is something that I've really learned as a certified financial planner, is so broad and very wide ranging. It's not just your 401k or a brokerage account. It's not just mutual funds. It's your life insurance. It's your health insurance. It's your, pensions later in life. It's your, again, not just your budgeting, your also debt. And debt, not to kind of go off on a little bit of a tangent, debt is actually not a bad thing necessarily. There are certain kinds of debt. Now, credit card debt, yes, traditionally that's not a great thing just because they charge you out the wazoo, you end up paying a lot and sort of puts you behind the eight ball, so to speak. So you really do want to make sure that you're careful. That's a piece of financial information that really is, it's been sort of a tried and true wisdom and it still stands today. Keep your debt under control just because it's same, that's something that can blow up on you before you even know it. And the interest rates that you're paying, it's just insane. So that's something you definitely want to make sure if you do find yourself with a lot of credit card debt, a lot of high interest debt, work on plans to get that taken care of. That being said, there are different ways to do it. And this might be a little bit of a, I don't know, Dave Ramsey will probably be upset with me saying this, but there's no one perfect way of doing it. I actually say the best way to pay off your debt is simply the best way that works for you. If that means tackling smaller cards, just to get that feeling of accomplishment, go for it. If that means tackling the higher interest, larger things, because that's going to further, encourage you to continue doing it, go for that. If that means making sure you still set aside funds for yourself for like self-care, then do that too. Okay, we can't, this ain't, there's this idea that you kind of have to punish yourself until you get all of your debt paid off. I'm not a subscriber to that idea because we only have, not to get all philosophical, but we only have this one life. there has to be a balance to it. And that is actually more of an idea, particularly with younger investors, the idea that they're not going to necessarily put off living until they retire. That's a rather traditional idea. And there's an aspect of financial, again, therapy that's very big about helping. I'll be very frank, and Mark, I mean this with men who retire at 60, who at this point have absolutely no idea what to do with themselves. They've only ever worked, they've focused and dedicated their entire lives to work, and now they're retired and they're driving their partners insane because they just have never thought about living before now. And they literally have to go into financial therapy. And it's a big thing with particularly the higher net worth planners who are helping these executives retire. They're like, I can only play so much golf. Now, again, I have to laugh. This is not typically a problem women run into. This is not a woman-centric issue. And that's partly because I think our approach to this is a little bit different. So again, we're not going to necessarily put off everything until we're 60. We're not going to put off life until we're 60 just to make sure that we are, as financially stable. We're going to figure out a way to be financially stable and live at the same time. And that is absolutely what I would more so encourage, is that balance. And there's, again, tons of resources out there that will help you achieve that balance in a way that works best for you. That's the other thing too. These things are, subjective. What works for me might not work for you. And I promise you, some of the advice I give, I know for a fact it can be hard to follow because I struggle myself following it. I've been doing this for 23 years. So it's not always easy. It's not necessarily meant to be easy, but it is 100% worthwhile. It's worth doing. And just as I mentioned in the beginning, you are worth it. Like I said, an investment in this, taking the time to learn about this is an investment in yourself. So do want to definitely get that out there. So we're kind of talking about the different kinds of investments. Like I said, we were going towards the investment side. I really do stress, unless you are particularly knowledgeable about this, I'll be very frank, if you are, you're probably not attending this talk. But if this is, if you're really just starting off, keep it simple. Look for things that are very transparent. If things seem overly complicated, they probably are overly complicated. And I found that the financial products that are particularly complicated don't always benefit you so much as they benefit the financial institution that is offering them. That's the other thing at the end of the day to remember when you're engaging with a financial professional. If you feel like you're being sold, you probably are. And that might be a reason to have a pause a little bit. And this is where, again, the whole idea of asking questions and making sure you're leaving the table with an understanding that suits you and your needs is so vitally important. So we are hitting on this sort of 7:35 mark. I'm going to just check in again. Any questions? I'm kind of going broad here. Is there anything anybody would like me to dive into a little bit more? I'm going to see we are good to continue. Now, this is something that I do want to kind of touch on with women, is the idea of a kind of gender bias in this industry. The unfortunate thing, if there was ever a male-dominated industry or male-centric industry, it's finance. As I mentioned, we are seeing some changes with that, but it is still something that it's still very, very much at the core and the foundation of this industry. And it's something that it's important to be mindful of that when you go into a situation where you do have to discuss your finances. I have had clients who have told me point blank that they want to work with me because I am a woman, just flat out. They're like, I've worked with, I feel bad, Mark. It's not a male bashing session. I can't stress that enough. It's not what this is meant to be. Some of the absolute most fantastic, most courteous and understanding and empathetic financial professionals I've worked with have been men, who've taught me and mentored me, and who I am eternally grateful for. At the same time, they will even admit that their approach is not, necessarily the typical approach that you would necessarily see in the industry. So going into a situation where you are meeting with a professional, it's helpful to, in the very least, bear that in mind and be mindful of the kind of language that's being used. If it is very technical, it's a lot of financial jargon, and you have mentioned, hey, not really getting this, and yet they continue to go in that direction, as well as continue to just talk and talk and talk and talk and talk. As you can see, I can just do that as well because I've been in this industry for a long time, and not stop and ask you questions and check in with you and make sure you're following along. And this is not just going right over your head. That's important as well. It's an important thing to be mindful of and to notice and to keep in mind if this is a relationship you want to continue necessarily. So these are things that as you're approaching it, you want to make sure that these people are out here to help you. So it all falls in the same the same line of asking how they're compensated, making sure that they have what's called a fiduciary responsibility. Now, just in case you're not aware, you might hear the term fiduciary a lot, particularly in finance. Hopefully you will. Fiduciary is simply someone who must by law act in your interest and your interest alone. So for instance, if you're working with a financial professional that works on commission and they do not tell you that, you could say that person was probably not acting in a fiduciary capacity because they could be dealing with conflict of interest. As Mark mentioned, I am a certified financial planner. It's actually a very specific designation in the industry. Very proud. Took me a year to get, and it's very proud of that. It's one of the hardest things I've ever done because it literally talks about truly every aspect of finance. Like I said, not just investing, but saving, education planning, insurance planning, estate planning, healthcare, just taxes, just the whole gamut. And when dealing with a certified financial planner in particular, that person is actually bound by law to make certain that the advice that they provide to you is 100% in your interest and your interest alone. So this is an important thing to ask about. No one can ever say they're a certified financial planner unless they are actually a certified financial planner. That's a big no. You can't use those initials unless you've earned them. So that's an important thing to ask is about someone's credentials. Someone is just a licensed financial advisor. That's perfectly fine, but they don't necessarily have the fiduciary requirement that a CFP does. Now, again, that does not mean they are not going to try their best and do their best by you. But in a situation like that, where they say I'm a financial advisor or I'm a financial broker, a financial consultant or an investment consultant, there's a whole myriad of terms that can be used to describe these types of financial professionals. Unless they say they are a certified financial planner or a CFP, then they are not. And it is truly vital to ask these questions of compensation, of interest, of the idea of fiduciary responsibility, because again, in the industry, they're not necessarily required to do that. They are required to provide something that is suitable, but suitability is a wide spectrum, very broad spectrum, and something that might be suitable at the end of the day might actually not be the best thing for you and your specific circumstances. You said in this industry, I like to think of everybody is a unique snowflake and might need a unique solution. Now, it could be that your solutions are similar, in the end, like somebody else, like again, using the example of being say a 30-year-old who's continues just starting off, building, her wealth. I would say in that case, you probably don't necessarily need to have a full-scale financial plan unless your circumstances are particularly complicated. You probably could just sit down with an advisor and just get some advice and some guidance, go into something that is simplistic. Again, KISS, keep it simple, stupid. I cannot recommend that enough. But that might be the absolute best thing for you. In a circumstance where you might be 60 or 65 and you're upon retirement and you're dealing with, say, $500,000 in 401k, and maybe you are divorced and you're just dealing with how you want to support, you're only maybe looking out for yourself, but you don't necessarily have a partner to sort of share the burden of that support in the long term. Your circumstances could be more complicated. Your solutions might need to be more complicated and more customized. But that's where everybody sort of is that unique snowflake, so to speak. So like I said, this is again all coming back to that same premise of ask questions, make sure that you are being looked out for. Don't say, I see that, and I say this so much because I see it so often. Don't be quiet out of embarrassment. This is unfortunately, I do see this so often. Shockingly, among a lot of younger women too. I mean, I see it with older women, but I also see with a lot of younger women. It's just, again, unfortunately, in our society, financial literacy has not been a big thing. It's getting to be a bigger thing. But we were not taught this necessarily in high school, even in college. And it's such a fundamental part of our lives and the success of our lives. So again, especially, as women, don't be, I get, if you take one thing away from this whole presentation is don't be silent. I know I keep kind of harping on it, but I can't harp on it enough. Ask questions. This is your money. You have a right to know all of this stuff. And at the end of the day, you're the one that needs to be comfortable. I think as women, we have a tendency to want to make everyone else comfortable, which is lovely. I'm very much a people pleaser. I get it. But when it comes to your money, at the end of the day, you gotta be on team you, and you got to make sure that your interests are the ones that are being covered. And if you are in a situation where you have a partner who does handle the finances, ask them what's going on, and make sure they, just like when you're dealing with a financial professional, make sure your partner is explaining it to you in a way that you understand. That's why they're your partner. This is something that you should be dealing with together. Because I'm the financial planner. I'm the one in my marriage that handles the finances. And I admittedly try to sit my husband down and say, okay, this is what's going on with our money. And God bless him. He's very much like, it's fine. You're handling it. I trust you. I don't need to know. To which I respond, I appreciate that. I love you too. Yes, you do. Yes, you do need to know. You don't necessarily need to know as much as I do, but you need to know. You need to know what's going on. You need to know where to find everything. You need to know how our money is invested. You need to know what to expect if something were to happen. Something happens to me, if I get hit by a bus, you need to feel some level of comfort picking this up, or at least knowing where to go to get the help you need to continue managing this, because it's an ongoing thing. So I think we're a little bit unusual in that sense where, more often than not, it's usually the reverse, but not always. Not always. Again, in my situation, it is. But that's the same thing, though. If you have a partner who is handling this more so, ask them questions, make sure they're covering it all, make sure you know what's going on. I apologize. I mentioned earlier, my allergies are terrible, so just gonna grab some water real quick. So when it comes to educational resources, the areas where you can learn more about this, like I said, the handout is going to include a lot of links. The institutions I recommend the most, as I mentioned, still kind of tap that Vanguard Kool-Aid. I'll be very, very, very upfront about that. Much to Fred's chagrin, to Mark, I still definitely tap the Vanguard Kool-Aid. Though I tell you, that being said, it's one of the reasons he hired me, though, too. It's because of that passion. So I'm always going to recommend their website because it's an easy-to-use interface. There's a lot of educational content on it. That being said, unfortunately, if you need to call and you might need additional help, Vanguard is good, but there are other institutions that might be a little bit better if you need more hands-on assistance. Fidelity will be the next one that I would say is actually, if you need real help and you're not as much of a self-learner or self-director, and I would suggest going to Fidelity, actually, because they're going to provide you with more service. And their service is excellent. They have an excellent client setup. I think their website's a little busy. That's just me personally. Again, I freely admit I'm biased. But at the same time, there's still just a ton of information available. I did spend a period of time before joining Fred at Prudential, and actually, gotta say, Prudential has a ton of educational content, particularly geared towards women as well. They seem to really catch on to this idea of empowering women in terms of finance, kind of ahead of the curve. God bless them, and actually have some great information as far as strategies that are, particular to women that help women. So they would be another one that I would very much recommend. Outside of that, again, this depends on sort of where you fall in terms of your needs. I do also suggest, if you're really, again, you're just starting out on your journey, the FDIC, you probably heard of FDIC insurance. That's the bank insurance that was so important when Silicon Valley Bank went. They actually have a program called Money Smart. It's all about financial education for adults, and it is fantastic. So if you are starting off, and you are just like, you want to learn about budgeting and debt, and again, protecting yourself and how to get in a position where you can really be more financially independent. And this is not necessarily how to get, how to become a millionaire through selling real estate or something like that. It's really just the fundamentals of finance that are going to help you no matter where your life takes you. That's a wonderful place to start for just to begin your financial education. It's a government website, which I also kind of like because it's not actually selling you anything. So there are other websites like Investopedia, which is fantastic. It really is great, but you are going to get so many ads for all these different companies, the Merrill Lynch's, the Morgan Stanley's, all this of the world, which again, I don't really care. I kind of just gloss over it and look for the information. But if you feel like that's something that could be distracting for you, I would probably say go with the FDIC website first, because that's truly unbiased. Now, if you feel, say you have the information, but you feel there's more of an emotional hang up that's maybe preventing you from taking the steps that you need in your financial life, as I mentioned, there is an actual website called the Financial Therapy Association. You can actually, there is a type of role now, a designation of certified financial therapist. I'm actually in the process of getting my certified financial therapist designation. This is something that I'm really excited about. It is very new. There's only one other financial therapist in Pennsylvania at this time, and she doesn't have a finance background. She has a therapy background. But if you feel there are things that are truly preventing you from taking the steps you need in your financial life, first and foremost, that's okay. You're not alone. That's way more common than you might realize. People do struggle with this, and not just women. Men struggle with it too. It happens. And the key, just like with any issue that we're dealing with emotionally, is the recognition of it first, and just taking the steps you can to get a better understanding of it and to deal with it so it's not impeding your financial success at the end of the day. Because again, at the end of the day, that's what you want. You want to be able to be free to do what you want, to live the life that you want. And one of the ways you're going to do that is through financial literacy, self-advocacy, all of that. So again, we're about at the 10-minute mark. And again, I've been throwing a ton of info at you that's sort of kind of broad, but has been meandering a bit. Does anybody have any questions at all? Is there anything that you'd like me, or even comments, anything like, hey, Elizabeth, I think this is weird or something? I really would welcome any of that.
Please, folks, don't be bashful.
Don't be bashful. At the same time, no pressure. Like I said, this is a safe space. And at the end of the day, I just appreciate that you've taken this time, not just to hear me out, but taking this time for yourselves. Like I said, that's a huge, huge thing. Just going into this with the understanding that you want to learn more, you want to expand your knowledge, because you recognize how important it is. And again, at the end of the day, everyone deserves a chance at financial success. That's the Vanguard. It's Vanguard coming out again. So going on, so just again, some of the additional resources, FDIC, it's another one. YouTube channels. Oh my gosh, there are so many great financial coaches and teachers on YouTube now. Clever Girl Finance is a great one. The Financial Diet, which I don't really like the word diet, but it's still a great one, which talks about sort of fundamentals. there is so much available now that you can really customize around your specific needs and your more niche of what you're looking to learn. So that's one that I would 100% suggest taking a look at. Now, if we are looking at just outside of companies, and just websites, the Wall Street Journal actually has a wonderful newsletter that focuses entirely on women in finance and women in investing, and just just the financial issues that women deal with. You do have to pay for that, but I think that you do get so many free articles or something per month. So if that's something, the Wall Street Journal is a little on the pricier side, so just a forewarning, but it does really have some great resources and information. I would definitely take a look at that. If you find, this is going into the more emotional aspect of it, if you find looking at the financial news, which I do recommend keeping up on, it's just a good idea. But if you do find that stressing you out, it's kind of figure out a good balance of what you can take in, how you can take it in, that's going to be helpful for you without keeping you up at night. So, and one of the better ways of doing, just one of the best ways of doing that is sort of, I say broad exposure, see what works for you. Like I said, something that might work for me or work for my clients might not necessarily work for you. But then again, something that might work for you might not work for me. So this is how we are all glorious little snowflakes. And fortunately, there's a ton of stuff out there for in regards to that. Another great site is the Motley Fool. That's typically free. Tons of information, education on that, written in a really more of an engaging way. It's not very dry. Kiplinger's is another website. I do have links as far as that is concerned, which is fantastic when it comes to teaching you more. And again, in what I find is a more engaging way. It's not that the era of the sort of stodgy financial disclosure, with somebody at the other side of a mahogany desk, we're really moving away from that, I think, which is a good thing, as an industry. And so the industry has found also that it's better for people to have an understanding of this. And so if you look, you just kind of take that time to look, there is just so much available, and it's put in ways that are geared to help you understand it. And as I mentioned also, you don't necessarily need to be able to pass the Series 7 broker exam. You don't need to go into that level of detail. Having a broad understanding of your first of all, your personal financial circumstances and what you might need, that will take you so far in your financial journey. You don't necessarily have to know what stocks are doing the best or what mutual funds are the best or what's outperforming this or that. At the end of the day, it doesn't really matter. Not really. I mean, I guess it could, but again, it depends on the kind of person you are. But if that's something that throws you off or kind of turns you off a little bit and has maybe kept you, concerned about that, has maybe kept you from really investing in yourself, I would very much encourage you to try to put that aside, because as I mentioned, there's so much available now that really is moving away from that. And you can really customize this around what you specifically need, be it, again, if you're starting out or you're finishing up, you will find something out there that will pertain to you, pertain to your needs, and explain in a way that you will understand. Because again, that's the most important thing at the end of the day. So we are nearing kind of, closing it at 8 o'clock. As I mentioned, kind of earlier in the talk, when it comes to market trends, or just to recap, when it comes to the, market trends are really the things that we can't control. If you can, try not to worry about those. We can't control them. Don't let them keep you up at night. Make your financial decisions based around your needs and your goals and what you are comfortable with, not about what the Fed is doing or what Jerome Powell says or whether Congress will get their act together with the debt ceiling. That's going to happen regardless. We have to focus on the things that we can control. What we can control is how much we pay for our investment advice and financial help, how we set it up, what we ultimately invest in, which again, I recommend broadly diversified, inexpensive, keep it simple. We can control how much we really take in as far as all of this, and how we sort of work it. And that's the things you really want to focus on at the end of the day. We're nearing on 8 o'clock. I just want to again, I can't stress enough, if anybody does have questions, please, raise your hand, let me know. If there's something you would like me to touch on a little bit further, I'm more than happy to do that. But if not, I just want to also say thank you so much for taking this time, for listening to me and my scratchy voice, unfortunately, and just taking this opportunity to explore this sort of aspect of life, because it's so important. It's so important, and so it's connected to everything that we do. And again, at the end of the day, the way I look at this very much so is it is a source of freedom. It's especially for women. We are really only free when we can handle our finances ourselves, and we're not in a position where we have to depend on somebody else. So if that is what you take away from this, and that you can ask questions and that you should feel comfortable doing that, then that is what I hope for. So we are already at 8 o'clock. Are you sure? Is anybody even comments, anything? I also welcome feedback. I realize I'm talking a lot. So if anybody has any questions, we still have a little bit of time. I'd be happy to address them.
I encourage them to type their questions into the chat. There's one thank you there. I don't know if you can see that.
Actually, here we go.
There you go.
There's the chat. Oh, okay. See.
Yep.
You're welcome.
Yeah.
Thank you again.
Thank you for sharing your time. Yeah.
Seriously, you guys gave me this time this evening, which I'm sure you had better things to do with your Thursday night. It's beautiful Thursday evening. But I really appreciate that you took the time to hear me out.
There is a question in the chat now.
Yay! Where is that? I didn't see it. I'm sorry.
Question from Deborah. Is there a dollar amount that someone should have at retirement?
That's a great question. And this is something that financial planners and lawyers everywhere respond, and it's probably going to frustrate you. It depends. Used to be that whole idea was, you had $1 million at retirement. Well, let's be honest, $1 million in this area might not actually be enough, but $1 million, maybe in Montana, probably fine. So it depends on what your retirement looks like for you. If you want to travel the world in retirement, you might need more than $1 million. Then again, I definitely know people who have done that kind of travel, or done travel across the country and have made that kind of money work and work well, throughout, very old age. So there's no magic number, unfortunately. This is where it does really come down to what you are looking for in terms of your life at that time. So I'm sorry, it's probably not super helpful, which I apologize. But my hope is that it kind of gets you thinking about that the number should not precede the goal, so to speak. Let the goal determine the number. Like, what do you want your life to look like in retirement? And it could be that we're approaching, say, for instance, you're 50 years old and you're approaching this now, and you have, a couple $100,000, and you're like, I'm not gonna be able to have $1 million by 60. You know what? That might entirely be the case. It might be the case that you can't retire at 60 and keep the lifestyle that you want, or that you're accustomed to now. That might mean you may have to work longer, or you may have to make changes to accommodate the level of income you're going to be bringing in at that time. So that's one of the reasons why I say at the end of the day, it really does depend. That's where, if you haven't yet, that is where a consultation with a planner, with a certified financial planner, would be super helpful. Now, you can actually, and this is, you can find this on the CFP board website, letsmakeaplan.org. There are financial planners all over the place, local, nationally, that will do consults with you. You don't have to have $1 million necessarily to have a consultation with a financial planner and get direction. So if you have not sat down with somebody yet, and this is something that you know you may need to do, that would also be a great place to start. So great question. Fantastic.
Anyone else?
Question. Anyone else? Any other questions? Again, I hope that was a satisfactory answer. Very seldom will a planner, if you ask, like, how much do I need to do something like this or that? More often than not, if they're a good planner, they're going to say, well, it depends. So it's something we have in common with lawyers, I've been told. Again, say if that is all. Again, I really appreciate this time. Thank you so much.
Yeah,
for your
thank you, Elizabeth. And I will be sending out that document in a couple of minutes to everyone who registered tonight.
Yeah, and you can find me on the Creative Capital website, which I believe I did put it on our letterhead, so there should be some additional information on there.
Great.
So you can find me there. If there's anything you'd like to ask me, you can definitely get my email address on that website. Shoot me an email. I would be very happy to help.
All right. Thanks so much, Elizabeth.
Thank you all. You have a wonderful night.
Okay, you too. Thanks. Good night, everybody.